This week was another rough week out here for stocks, and the S&P 500 once again pushed up only to close in the middle of the range. And the question is, this week, should stocks fear Trump or will it be Jerome Powell that stocks actually fear? We look out here on the weekly chart and notice we have this potential for a double top pattern. If indeed this double top pattern is going to play out, let's talk about where that pattern would complete. All the way down here at 539. Now, if we measure from all-time highs down here to 539, that would be roughly 11% drop. Now, we do see the stock market drop 10% or more once every 12 to 18 months. So could we be in store for that 10% plus correction coming up? We come over and look at the fear and greed index. Right now, we're sitting at 39, and the fear and greed index has been spending a lot of time in between this fear and teetering between extreme fear. And earlier this week, we were able to just nudge over into neutral. Bam, the bears smacked it right back down. This is a clear indication that sentiment just is not nearly as bullish as it was last week. And then we look at the most recent investor sentiment survey. Notice the bulls came in at 33.3. However, I want you guys to focus on something very carefully. Back on January 15th, we had a bullish reading as low as 25.4. And look at the bearish reading at that same time period, 40.6. Right now, we have a more bullish reading than January 15th, but look at the bearish reading, 42.9. So ARM traders really bracing for volatility coming up, either from Trump's tariffs or potentially Jerome Powell. Because if you guys were trading the markets out here on Friday, you guys probably seen this, especially if you guys join me on the live stream. I want to let you guys know I stream live Monday through Friday. If you guys would like to join me for the New York session, make sure you subscribe and you have the bell notifications turned on. We will be giving away a 50K Take Profit and Trader account on Monday, so make sure you guys join. Now, look at when Trump came out and basically announced where he told Republican lawmakers he plans to issue reciprocal tariffs as early as Friday. And then they walked it back and said, nah, that might be a little bit too soon. It'll probably be the following week, which is going to be this week coming up. Look at the dollar index, went rocketing on the way up, and we saw the S&P exactly come crashing right back down. And if you guys had joined me on the live stream on Friday, it was quite comical. I was about to take my profits, and then bing, we got this nasty red candle. Here's the candle in the S&P once that news was released, but we got to ask ourselves the question, has the market had enough time to price in the reciprocal tariffs out there? And we come over and look at the volatility index. We see on Friday, the VIX was up 6.84%. Notice the VIX closing near the upper end of the range. Out here on the daily chart, the VIX has been at these lower levels where in the past, we've been able to see volatility spikes. So let's not be so surprised if this is going to be another bout of volatility out here this week. When we look at this article right here, Trump says he'll roll out reciprocal tariffs next week. Here are possible targets. Now, if we scroll down here real quick, it basically says he's probably going to have a meeting on Monday or Tuesday and have an announcement, probably a press conference. Now, we got to be on high alert this week, all right? Not only do we have to deal with planned economic news, but we also got to be hypersensitive to any type of tariff news out there. And let's not forget, it's not just Trump this week that we have to worry about as well. Because if we come over and look at the economic calendar on Monday, it looks like we have a clear slate unless we hear more talks about tariffs from Trump. On Tuesday, this is where Jay Powell starts to take the stage, and we have Powell testifying at 10 a.m. on Tuesday. Then again, Powell's going to be testifying on Wednesday as well. And let's not forget, we also have the CPI data coming in on Wednesday. So one thing I want to make you guys aware of, if you guys are new to the markets, when Powell normally has these two-day testimonies, one thing that we find quite often, not 100% of the time, but more times than not, one day we'll see a very bullish reaction to Powell testifying, and the next day it could be a very bearish reading. Now, it could be day number one is bearish from Powell, and then day number two, Powell is a little bit more bullish. But again, that seems to be a common theme. On Thursday, we have PPI data coming out, and on Friday, we have retail sales data coming out. So this week, it's going to be very, very important between Trump and Powell. And on Friday, let's talk about the news that we had on Friday. Not a lot of people are talking about this, but we had the non-farm payrolls come out. And as we look, we actually produced a little bit less jobs than what was forecasted, 143,000 versus a forecast of 169. And we look at the unemployment rate, it ticked down. Now, we didn't see a big movement right there. Where the big movement really came in was the 10 o'clock news. Look at consumer sentiment. Came in at 67.8. Now, is this because of tariff talks? Let me know your thoughts in the comment section down below. Then we had inflation expectations coming in. came in at 4.3, previously 3.3. That is a huge difference out there. And think about this. If consumers lose confidence, one, we're likely going to see the VIX shoot up, and we're going to see stocks like Tesla continue to drop even lower. Look at Tesla now below the swing point over here, not quite at the ABC pattern down here at 347.24. Now, to remind you guys, right now, Take Profit Trader has a 50% sale off all their valuation accounts. Simply click the link in the description box down below and use code Epitome at checkout. I also trade with my funded futures, Apex, and now I'm also trading with Tradeify. Use the links down in the description box down below. It's a way for you to support the channel and make sure you get the best deal with those prop firms. And keep in mind, it's not just Trump, it's not just Powell, it's not the CPI data and other economic data that we have coming out this week, but we also have a slew of earnings coming out. Monday before the bell, we have McDonald's, we have Monday.com. On Tuesday, we get Shopify, Coca-Cola. After the bell, Super Microcomputers. On Thursday, we have Datadog, we have Coinbase, we have Twilio. We have a lot of companies reporting earnings this week. And if we look at the big expected movers out there, pay attention on Tuesday. SMCI expected to move plus or minus 20%. Lyft expected to move plus or minus 17%. Shopify expected to move plus or minus 13.5%. Then on Wednesday, we get Retta and Hood, also expected to move over 13%. So we have a lot of potential big movers out here this week. Now, speaking of earnings, if we look at some of the stocks that have earnings as of recently, look at PayPal, came out with earnings. Yikes, not looking too good. We look at Google, came out with earnings this past week. Yikes, big gap down, not looking so good. We take a look at Qualcomm, gap down a little bit, not as big of a movement on the way down. But again, we've had a lot of negative reactions out here to earnings, and we're going to see, is there going to be more of that to follow? Keep in mind, February, the second most bearish month out here for stocks. Now, when we come over real quick, we take a look at the SPY, and we compare that to the chart on the bottom, which is going to be HYG, high yield bonds. Notice what we have up here. Yes, the S&P 500 is slightly making lower highs, but look at the high yield bonds. We're starting to see HYG really starting to put in a little bit of divergence. Notice this last high in HYG is substantially lower. Could that be a warning sign for stocks coming up? Then we come over and look at the yield curve. We actually see the yield curve starting to come back down. Now, could that be because there's more fear coming into the market? So people want safety. So now they're flooding in the bonds, which in terms is starting to push the 10-year lower. Then as we look at the transportation index, notice the Dow basically coming up here, making a double top type of pattern. But then we look right down here and we take a look at the transportation index, a huge divergence. Notice the transportation index not able to come back up here near the double top, nowhere near the high. So again, that's a huge divergence. That could be a huge warning sign out here for us. Now, as we look at the SPY real quick, this is something we talked about. Yes, we can have potential to have that double top pattern out here on the weekly chart, but could this also potentially be a bull flag pattern? Right here being the flagpole on the way up, this little consolidation that we've had actually producing the flag and getting ready to break and resolve to the upside. Is all the fear over tariffs just a little bit overblown, and stocks are really getting ready to go ahead and have a massive short squeeze on the way up? We look out here on the 4-hour chart. What do we see? MACD indicator slightly crossed to the downside, trying to make its way down towards the zero line. And right now we do have a series of lower highs and we do have lower lows at this moment. Then on the 30-minute chart, notice the MACD indicator is below the zero line. So do we see this starting to firm up? Do we maybe get a nasty gap lower, maybe Monday, even going into Tuesday? Then once the reciprocal tariffs are announced, the market digests the move, and then we start to see things firming up. Keep in mind, the SPY basically closed with a B as in boy shaped profile. This is not necessarily bullish or bearish, but what I would say is bearish is the fact that we closed near the lower end of the range. Now, if we can get above value area high, that would basically indicate highly probable we're going to come all the way up here and basically test the upper third of the range. Now, as we come over, look at the S&P futures markets real quick. Notice on Friday, just a bloodbath out here for the afternoon. Really, ever since 10 o'clock, we just kept going on down. Now, we were able to rotate from value area high down towards the point of control and actually a little bit lower. And one of the things that we're talking about on the live stream, if you go ahead and you draw this out, we had an A to B equals C to D pattern. And you can see on Friday, we actually completed that pattern. Normally after ABC pattern completes, the market does something other than continue in that direction. It can be a pullback like we actually produced on Friday, or it could have been a consolidation. Now, one of the targets I talked about to the downside was this high volume node. The market was a little bit of an overachiever and kept going lower. Now, I also want to pull another fib off the chart. And this time I want to use a Fibonacci retracement from the swing low right down here, up here towards the swing high. Notice we came down to the 38% level. Quite often the S&P will retrace to the 50 or even 61.8 fib level. 50% level coming in about 6,029. Now, something else we want to take note of. Right down here at 6,029 and a quarter is also going to be the weekly value area low. The point of control will be at 6,049.75 and value area high will be up here at about 6106 and a quarter. So if we can go ahead early this week, maybe even Sunday night, gap lower, go ahead and produce a lower move and then start getting back above that 6,029, I then want to turn my attention towards targeting the point of control, maybe some of these minus development areas of the profile, and then all the way up here towards value area high and maybe a short squeeze to new all-time highs. Now, as we come over here and we look at the daily profile, we can kind of see like we saw with the SPY, kind of a B as in boy shaped profile closing in the lower end of the range. And we can basically see once the consumer confidence news came out at 10 o'clock, we just kept drifting down for the remainder of the day. Now, as we look at value area low, we have value area low coming in at 6,043.75. We have the point of control about 6,049.75 with value area high being up here at about 6,084 and a quarter. Now, something I do want to watch for, there is a potential that we have this larger A to B equals C to D pattern in play. And that would be the A to B leg, the B to C leg. That would give us a price completion all the way down here towards about 6,001. Do we get a quick flush down there early this week and then potentially get that weekly profile rotation trade on the way up as the week progresses? Now, I also this week want to pay attention to the dollar index. The dollar index out here on the daily chart on Friday showed some signs of potential trying to firm up. Will the dollar index continue to rocket up? We also see the 10-year yield on the move back up. And right here, we can see we almost hit the ABC target to the downside. MACD indicator is back down towards the zero line. So I want to keep my eyes on the yields. Do we see yields starting to drop, or will the 10-year start to rally up once again? Also, if we look at gold, may have put in a short-term top. We had that hanging man candle followed by a pin bar shooting star type of candle. Do we finally start to get a pullback? Keep in mind from contract rollover, we have gap support down here about 27.96. And then the gap down here being filled at about 27.69. MACD is also a little bit elevated, but we have not started to get the turn in the MACD indicator just yet. So let's be a little bit cautious. We could see gold actually starting to weaken once more and more tariffs are announced. Now, jumping over and look at the Qs real quick, we see that nasty bearish engulfing candle. But if you look at it, you can still see we have this potential for an ABC pattern on the way up. 543.93 would be that ABC target completion. However, we must get above this swing high right over here in order to validate that potential ABC pattern. MACD indicator on the daily chart, really no signs, no bullish or bearish signs for us. Basically flatlined. Also on the 4-hour chart, kind of flatlined out here. But then on the 30-minute chart, notice we are below the zero line on the MACD indicator. Do we start to flatten out? Maybe starting to firm up here just a bit. We have that B as in boy shape profile. And if we can get above value area high, watch out for that upper third of the range to be tested. And we kind of have a minus development area within this profile, anywhere from about 528.28 up here to about 529.91. Keep in mind though, if we do break value area low, if we get a weak open on Monday, we start getting back above it, we can then target the point of control, value area high, and then right up towards that minus development area. Now, as we come over and start looking at the NASDAQ futures market, see we got that nasty downturn on the way back down on Friday. And just like the S&P, we were also able to go ahead and complete the ABC pattern completion up here. However, one thing we did not do, we did not take out the untested point of control at 22,007 and a quarter. Now, something else I want to do, I want to pull my Fibonacci retracement from the swing low up here towards the swing high. Notice we hit the 38% retracement. If this level holds, watch out, that could be a very strong move, which would indicate the NASDAQ is likely going to make a new all-time high. But it's more likely than not, we're going to see the NASDAQ drifting down towards the 50, maybe even 61.8 Fibonacci levels. And then we'll see if indeed we start to firm up. Now, when we look at the weekly profiles, value area low will come in at 21,454.75. The point of control will be about 21,637.75 with value area high coming in about 21,845.75. So this week, if we start dipping below value area low, then we start coming back up. I would then want to play the rotation up. First target area would be the point of control, or maybe you could use this as a quicker target right here near this high volume node at about 21,586. Then the next node up here about 710, then the next one at about 761, and then value area high. Then see, can we hit the untested point of control and then maybe run towards all-time highs? Next, we jump over and take a look at the daily profiles, and we can see exactly from 10 o'clock, we just kept drifting all the way down, closing near the lower end of the range. So again, Sunday night should be action packed. Now we have value area low coming in about 21,572 and a quarter. We have the point of control at 21,596 and a quarter, and value area high will be way up here at 21,770.25. Now, do not be surprised if we go ahead, we gap down. However, if we do gap lower, keep in mind for a quick little scalp on the way back up, if we break below the low of the day, we start coming back up. We can play a quick scalp trade towards value area low. We get above value area low, play the point of control. Any of these high volume nodes on the profile would again be additional targets, and then all the way up here towards value area high. Anything above value area high, I want to retarget this consolidation zone up here, right near this high volume area on the profile, somewhere around 21,850. Now, if you guys want to learn about Take Profit's ability to reset funded accounts, make sure to watch this video right here.